please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The other interesting stock yesterday was Lupin. If we can see the chart of Lupin yesterday, while we were doing closing bell, of course, the numbers had come and the stock reacted. No, not this chart, the yesterday chart. Now, there was a huge short covering rally and that was sold into when the management started speaking. But let's see if there is some rally today as well. Let's first hear out from the management and then, of course, we'll get the guest as well.
This particular quarter, we had the impact of the metformin erosion that we talked about last quarter. So that continued into Q2. And we also had the Claris One impact. I mean, that is the reason why the erosion level is a little bit higher. But, on an annual basis, we still expect it to be in the high single digit.
We've been trying to push the FDA to get an answer as well, and then, unfortunately, you really have no visibility into these processes. But I think we know that, I think typically, as I'm seeing that the FDA seems to take 6 to 9 months to reach closure, and hopefully the next couple of months, we should have answers for both Goa and Pithampur. Okay,
so Prakash, how to approach this? Yesterday, of course, we saw short covering and then that being sold into. But is the earnings downgrade cycle ending? The management itself says that the good earnings will only start in FY19 or maybe in FY20. How to approach the stock then?
No, so I think they're being very realistic about setting expectations, because earlier the stock actually carried the burden of very high expectations, and then that's exactly why the disappointment was. So my sense is you'll have the weaker hands getting out, and the short covering was a classic example where people would have sold into whatever 50-60 bucks that they were getting higher than the earlier close. But you'll probably find new investors coming in a trickle, maybe after, as I said earlier, after a quarter or two, once they start seeing the US pricing environment stabilize for them, because it's not going to happen overnight. It will give you enough visibility. So don't rush into it. I don't think there's a rushed out trade. People will probably be taking it slightly more patiently.
Okay, we are just a few seconds away from the opening of the market. So we'll just wait by to see what kind of cues we are getting from pre-market. Okay, that's a poor response. We understand that bidders are only willing to pick up 7,000 crore of the debt, maybe half the debt. So that would be, actually that is on expected lines, I would say. The rupees opened a tad stronger. 64.81 I think is the number I'm getting on the Reuters screen. Which was a little surprising. I thought rupee could be under pressure because of the fact that crude prices are higher, but at the moment that's not showing. The market's opening slightly in the green at this point in time. 0.5% higher. I think we should pull up maybe Tata Steel first and check out how that price is doing. It's a fairly green green start for the markets as a whole. Tata Steel starting 10% higher. I think we should wait.
I'll give you two more rates, and I have no idea
why this
they're free rates or anything like that. IDFC Bank is showing down 10% for now. Let's see how that plays out. The other one was Jet Airways. The first rate was down 9%. Now it's down 3%. So not sure.
Bell is 10%.
Bell is 10%. Bell is 10%. And I think on Tata Steel, the market will take into account that the global rally, especially the Chinese rally, is continuing. So I think that's something that the market will take into account. But this is not the fair rate on Tata Steel. It will settle down. Let's see how it does. Couple of other stocks which are interesting. Graphite India, that's been a circuit-to-circuit stock. Both Graphite and HEG, that's up about 5%. GVK Path, that's been on rally for last many days now. So that's also in the green. So let's pull out the Shriram Group stocks. Shriram Transport Finance and Shriram City Union.
They're all up. City Union 4.5% up. Transport about 1% up.
Okay, transport has seen, I guess, the best part of the rally.
Yes.
So it's plodding a bit. Shriram City Union is still rising. Shriram City Union fell after the deal was announced. I mean, around July, August, we started to see that stock fall. So perhaps there's a little bit of a relief rally in that stock. Maybe we have to wait for the stocks to settle down, because now you're seeing a more realistic rate. But still, Tata Steel is up 3%. Still, Axis is up 2.25%.
GMR Infra is up 10% in pre-open. I don't know if that's just catching up to the GVK trade. But GMR Infra is up a bit. Make Money Organics, we spoke about that stock. That stock is also having a good start in pre-open. So Axis Bank, Lata, that's opening 2.5%.
Axis, I think, will hold up the Nifty Bank today. We are told that private equity investors are interested in the stock. We'll allow the market to settle down because it's still gyrating wildly and get some F&O strategies going. Chandan Taparia of Motilal Oswal Securities is with us. Good morning, Chandan. Which stocks would you advise trade today?
Yeah, very good morning. The market is making higher tops, higher bottom, and hitting the new fresh high on every day. So overall trend remains positive. On the stock specific, first is buy on Federal Bank. Recently, the stock has corrected from 128 to 119 level, and after that, now it is forming the support. It has formed a classical example of resistance turning as a support. So expecting it to head towards again 128, 127 kind of level. So recommending to buy with a stop loss of 119 for an upside target towards new high. Second trade is buy on Dalmia Bharat Cement. This stock has done well, has been making higher tops, higher bottom formation. Recently it has given a classical breakout and expecting this rally to extend. So recommending to buy with a stop loss of 2880 for an upside target of 3100, as we have seen significant jump in the trading as well as the delivery volume. Last trade is buy on Tata Motor. This stock is making higher tops, higher bottom formation. Most of the auto companies are doing well, and it was the laggards earlier, but recently it has taken supported 50-day exponential moving averages. We have seen fresh put writing activity. So here also I am expecting positive stance. One can buy with a stop loss near to 428 for an upside target towards 455, 458 levels.
Okay, those are a couple of rates. One smaller company is catching the eye because of blowout earnings. Automotive Corporation of Goa, just pointing it out. I mean, interesting rates on the screen. 10% up. Numbers were very, very good, as Naveen was telling us. Actually, speaking of autos, Prakash, I mean, that's a sector you track really closely. Still buying Maruti, I'm guessing. I mean, now the 10,000 target, I remember when you spoke of it, it seemed so far away, and now those targets are very real, and brokerages have put them out.
Yeah, it starts getting more real. Yeah, absolutely. So what I liked about this time around, also the numbers. When we went into numbers, there was not too much of high expectation because of the management's commentary on higher raw material costs and all. But what's interesting is that it's in a sweet spot by itself. More demand, less to sell because you can't manufacture more. So if you produce more, you can sell more, which means you price yourself more smartly. You have a product mix which gives you very high margins, and that remains unaffected irrespective of GST, irrespective of people having money. And then, by the way, they have already started this new novel idea of putting in about 1,000 crores into land parcels to buy showrooms out and lease them to dealers. So it's like, I'll invest into the business, you run it for me. I mean, which is a very efficient way of doing it. So I think Maruti is unstoppable. There is no doubt. I would still buy. But look at Tata Motors. This is again validation of the fact that bad earnings at times are good triggers to get in. And then that's what. And I think Anuj was referring to that in Lupin as well. Whether is that a similar opportunity where you say, okay, everything is kind of priced in, and now you look at getting in. So Tata Motors, the same thing happened. But I still believe Maruti, Ashok Leyland will continue to hold sway over the news flow.
I'm pretty intrigued by the way in which the rupee is stronger. It's not stronger a goodish bit. It's just about 9 pies stronger or thereabouts. But the point is that crude is higher. It's not as if we're getting money in equities. And the dollar has actually strengthened a bit. If you look at the dollar index, it's up at almost 95. So this is a bit intriguing. It's not a big move. I mean, as you can see, 6 pies move. We don't have to make a song and dance about it. But considering that the dollar was strong and the crude prices are higher, we should be showing some pressure. We are not. Let's also get to the BEL stock, Prakash. Once again, what will be a price target for BEL?
Oh, so the long-term target, of course, was, we talked about 222 a long time back, which is already
getting closer.
So now we'll have to, after these earnings, maybe, we'll see a reset of sorts. And then interestingly, if defense is likely to be one of the key areas for the government's capex, as we are getting, very clear indications of once, they are out of this banking sector cleanup. my sense is BEL will probably lead the rally for this particular area. So you could probably now look at about closer to 300 kind of levels in the next 15 to 18 months. You'll have to give it time, but I think the EPS accretion itself will move about 20-25% higher after this earning season.
Let's get to our technical experts yet again. Ashwini, is there a trade in Axis Bank?
See, basically Axis Bank is in a 70-80 point range, say 470 on the downside, 530 on the upside. You'd really need for it to get past 530 for any sort of bigger action. But right now it's just coming back to 500, so nothing significant here.
Okay. News coming in on JP Power, just confirmation. We had this news yesterday, just waiting for morning to put out that news that there are two bidders for JP Power, Brookfield and Resurgent Power. They are willing to take on only 7,000 crore of the debt. So a bit of the debt is going to be left behind, and I think banks like ICICI, SBI have stake, and that's going to hurt.
Tata Steel is actually ending in the green in pre-open, which is interesting. We thought that it will start in the red. At least that's not happening. Maybe intraday it goes there, but that's interesting. The other stock to keep an eye on, of course, would be Jet Airways. That's been seeing a one-way rally. Ashwini, thoughts on Yes Bank? Has it sort of bottomed out? Do you get that sense?
See, it appears that it has bottomed out because from the 200-day moving average, it's moving up. While, it has bottomed out, it may not run up immediately. Yes Bank, takes its own time to bottom out, but around 300, I think it's a fairly decent buy. At some point, I think it'll get back to 375, 380.
Okay, and thoughts on the rates of pre-open market, Ashwini, the Bank Nifty actually starting better than the Nifty, and your 9-10 call.
See, this 1 point move on the Nifty and 50 points on Bank Nifty is nothing significant. We need to wait for a stronger open on either side to be able to chase it. So for the moment, it's fairly lukewarm and individual stocks will probably do better. As far as that is concerned, VIP Industries, that's a buy with a stop of 287, target of 303.
Prakash, what would you do with Infosys? Would you tender it in the buyback? I mean, is that sort of best case scenario, or would you hold? I mean, the operational strength in the numbers that we saw this time, does that give you reason to believe that maybe holding on is a better bet?
Yeah, but the differential between the offer price and the current market price, it's significant.
It's still quite huge.
Yeah, so that is one of the reasons. So everything's good at a price, and 1150 is not something that I
coming
see
in a hurry
very easily. So maybe by the time it gets closer to that, you could always buy more from the market if you tendered. So that's what is likely to happen. Everybody is going to think in sync and actually dump all of that in the buyback.
Okay, Prakash, will you buy any of the PSU banks now?
So interestingly, one development overnight, Lata, that happened, and I'll quickly run through that, was the consolidation step that seems to be in the offing, the M&A within the PSU banks.
I thought they said that is the next step. No?
Yeah, so that's what I'm saying. So they've started the process for that, with the finance minister heading that particular alternative mechanism to evaluate all these wannabe.
That's at least 4 months old, and then they put it in the back burner because.
No, so yesterday they've again recast that whole.
The members of this alternative mechanism,
they've put up a process which seems very clear that it's going to be evaluating that on certain metrics, on certain parameters, which have been defined, which was not the case earlier. There was just a thought process. Now it's kind of seeing some sort of fruition. My sense is that the weaker ones will probably start seeing a little bit of a accumulation in anticipation of that, because that's still, as you said, maybe a quarter away. It's not an announcement that's happening next week as people had rumored. I mean, we'd seen a lot of whispers about that being the next big announcement, but it's going to take a while because it's a process that's underway.
So you will buy any of the.
So some of these, like look at a Indian Overseas Bank. Government owned, absolutely crappy this thing. Loans, assets, nothing on the books, but 80% owned by the government. They can do whatever they want with it and get rid of the baggage. It's not too big either to start the process. So some of these banks will get looped on to the bigger ones, and that's where I think you could probably see a little bit of a tactical upside. And some of them will benefit also out of this. So I think Andhra Bank is another pick that I've always liked, given its strength and the mismatch in pricing and book value and all. So that's where you could probably see IOB, Andhra Bank, some of these smaller banks could probably reward you more in the next 3-4 months.
For the moment, of course, central bank is a little under the weather after the terrible numbers that came in yesterday. Other PSU banks have not yet announced numbers. Well, for bidding for JP Power, those are the flashes on your screen, and Anshu Sharma, our correspondent who got this news, is with us. Anshu, tell us all that you picked up on JP Power, bidders, price.
That's right, Lata. Remember, JP Power has a debt of about 15,000 crores, and the Joint Lenders Forum, the bank appointed SBI CAPS and EY to assist the company for sale of minimum 30% stake in JP Power Ventures in August, and now we understand that banks have shortlisted only 2 players amongst the 5 bids that were submitted for the JP Power. Both these players have offered non-binding range of sustainable debt of about only 7,000 crore. Remember, JP Power has a debt of 15,000 crore, and this STR or strategic debt restructuring was invoked for the company in 2016. The major bankers for the debt of JP Power are ICICI, IDBI, SBI, Central Bank, amongst others. So not very good news, but we understand for 7,000 crore, the non-binding range of sustainable debt will be taken by the 2 companies that have offered the bid. Back to you.
Okay, Anshu, thanks a lot for that. Well, just keep an eye on Infosys. Of course, the stock's opening down 2%. It's now pricing in the fact that now if you buy, you can't participate in the buyback. So the discount that was prevailing on the November futures yesterday closed at 924. I think the stock's now opening at 925, 924. That was a 2% discount, which is there on the buyback, because that's where you want to hedge, in case you buy, with the only motive for tendering in the buyback. So that's the reason that you had seen that November futures trading at a discount. That would get wiped out in today's trade. When the stock opens, it should open at the futures price. At least now the futures price and the stock price would move together.
More in sync.
Would move in sync. So that will happen, of course, in today's trade. 17 seconds left. Ashwini, is there any trade on Infosys? Of course, we're looking at the spot rate. The futures rate would be slightly different.
It's basically choppy stock, 880 downside, 935, 940 upside. I don't think anything much is going to happen here.
Okay. There goes the bell, and it's as flat can get. Now down about 2 points. Now down about 2 points. The Nifty 10,359, 360 is where it's opening. Sensex opening 10 higher. That's 33,275. So it's very flat at the index level. At a stock level, what's holding up are Axis Bank and Tata Steel. Axis Bank apparently has found buyers or people who are going to put in money, capital into the stock, and that's 2.5% higher. Tata Steel is up 1.25. Yes Bank is finding its feet at around that 315 levels, so 0.6 higher. HCL Tech, Eicher Motors, Cipla, SBI, IOC are among the other stocks that are doing well. The point is Tata Steel is in the green, up 1.5%. So clearly markets are looking at earnings next quarter and the quarter after and the quarter after, which perhaps will be supported by good, strong steel prices. Infosys is down 2.3 as it adjusts to the buyback pressures getting over. Dr. Reddy's down 1.8, results due today. Coal India, GAIL, Bharti Infratel. Again, the numbers, well, actually in line, but probably the other income was a bit of a disappointment. So that's 0.8 in the red. BPCL, GAIL, Indiabulls Housing, Z Entertainment, Hindalco, Sun Pharma, among the other stocks, L&T, HDFC, ICICI Bank are among the stocks that are in the red. So more in the red than in the green, but only by a smidge. Axis Bank is making all the difference. Mid-caps?
Mid-caps, I'll start with the earnings. So some positive on Balaji Amines, which is up 7%. Automotive Corporation of Goa, 11%. You know, great numbers on the top line, bottom line, but that company obviously has a margin issue. Anyway, the market is, for the time being, giving some benefit of doubt to Reliance Communications, 10% up. Some more earnings stocks, by the way, on your screens before we move on. The other two were negative reactions on Central Bank of India and what we saw on Astra Micro as well. So those are the earnings reactions playing out. Let's come to the deal stocks now. So Shriram City Union Finance about 4% up, Shriram Transport 1.5% up, IDFC Bank as expected are in the red. Aviation stocks are still managing to hold their own despite that surge in oil prices. So Interglobe is actually up about 0.5%, and Jet is also holding steady after that massive move that we saw yesterday. I'll just quickly cap it off with some other big stocks that are on the move once again today. So Titan is starting out positive. There's some bit of green on Havells. At least the first tick was positive. Let's see if that continues. Just Dial is slightly positive. Spark is correcting the move yesterday.
BL.
yes. Of course, BL is really the big one. Absolutely.
Yeah.
Anuj, so what's the reading now? I mean, mid caps again slightly better off than the Nifty, the trend that we saw yesterday as well.
You know, today the stock that could be chased is BEL because, you know, we saw what happened with EIL. We've seen what can happen with good earnings, and especially after you see a lot of consolidation and when the stocks break out. So that's why, you know, I won't be surprised if BEL has a really big day, because, you know, it's a stock which has done absolutely nothing, and we're talking about a defense stock available at the kind of market cap which it is. So that, I think, would be the trend stock of the day. The other stock to keep an eye on would be Escorts ahead of numbers, and that's really been a strong stock, and that's also having a good start. I think Just Dial is the other one which has had a good start. So again, it could be one of those days where you look at the largish mid caps. You know, these are some of the stocks that are doing really well in trade. Ashwini, thoughts on market opening and any stock that looks good to you?
See, the Nifty is back to 10,350. That is the lower end of the band. The Bank Nifty futures are in the first bar. They've come off, 70 points. So I think at higher levels there is a problem. So my sense is taking short positions on the Bank Nifty or the Nifty may not be such a bad idea with a stop at the day's high, because in terms of sectors also hardly 4 or 5 sectors are in the positive. So that way I think at higher levels there is clear resistance. But overall there are these individual stocks like BEL, etc., which may do well. But today also you'll have a mid-cap day. Large caps are having trouble moving up.
Yeah, absolutely. So Darshan, in fact, take that point up with you. You were saying you will hold long. I think your stop was 10,300 on the index. So is there any advice for the index or for the Nifty Bank to start with?
Well, yes, it's the same. We hold long positions, and the stop is 10,300 for the Nifty and 24,700 for the Nifty Bank. The markets could be choppy. It's very difficult to give a shorter term trade. You have to carry these positions with this kind of protection. And there are two buying ideas that are coming up. One is NHPC. It's the 28 rupee stock, and it's giving a very attractive breakout. That's a buy. It's not a day trade, but you can hold it, and there's money probably on the upside. And the second is Hindustan Zinc, that old favorite. Metals are doing well, and it's probably even a day trade and a carry forward trade, both for buying.
Okay. Nitesh, Shriram City Union, I wanted to ask you, well, Shriram Twins, but Transport anyway is having a good time. On both those stocks, is there a trade?
See, in fact, we've been recommending Shriram Transport for the last 2-3 days. I've not been tracking Shriram City Union, so unable to comment on that. But I think Shriram Transport Finance is definitely looking a stronger bet and heading towards 1240, 1250 in my opinion. I think any 5-10 rupee dip I think should be used to add on to existing long positions, and I would be comfortable taking fresh positions even after 3 days of good rally over here.
Okay. Oh, by the way, just want to keep an eye on BEML as well, because we've seen a big rally in BEL, and BEML has corrected from the high point. So all of a sudden starting to see a bit of a rally in BEML as well. Prakash, before we thank you, any thoughts on BEML or any other interesting stock that you would want to recommend?
So I agree. BEML is the other one which will also kind of mirror this particular move from BEL. But United Phosphorus came up with numbers yesterday, and then the market somehow didn't like those numbers, and optically it seemed like a miss. But given the guidance and the strength that the company has, and now that it's part of the Nifty, I think it's an undervalued stock and an under-owned as well. So you'll see that making a comeback in probably starting from today's session, and then we'll expect that to kind of go to that 865 zone in a very short span of time.
Okay. Incidentally, JP powered the trade. JP stock itself is higher. I mean, it's all pennies. And most of the PSU banks are in the red, and that may not be only because of JP, for instance. But the point is, PSU banks for the moment are definitely taking a breather. And now the Nifty is showing more signs of, I won't say pain, that's a strong word, but more signs of not being able to cross and go forth above that 10,350 mark. It's now down about 0.2%, below the 10,350 mark. We'll, I think, get back and ask our technical advisors what to do about the Nifty. But before that, Ashwini, any big call for the morning?
See, almost all sectors are in the negative right now. So the big call is that people may be getting trapped on the Bank Nifty long side. So the call remains to get short on Bank Nifty as well as the Nifty, and see what kind of traction you get on the downside. Meanwhile, things like BEML, Titan, BEL, etc., they may continue to move higher. But overall, the market looks like it's getting ready for some sort of a dip.
Okay, getting ready for some kind of dip. Thanks, gentlemen. We'll talk to you at around 10 a.m. Prakash, thanks to you as well. Let's invite our market master for the day, Pradeep Shah, chairman and founder of India Fund Advisors, is with us now. Pradeep, good morning. Good talking to you, actually. Your thoughts on the kind of rally that we have had in Indian market and whether it has more legs to go in line with the kind of rally that we have seen in global markets?
Well, I think the Indian market is discounting future earnings growth. I think we have a lot of liquidity in the system, so that also is helping. The outlook is definitely good for India. We have had two big setbacks, demonetization and GST in terms of affecting the economy. But pretty much both are behind us. The GST, of course, there's still some tweaking left, and perhaps the best results will start coming from January. Already the first indicators in both industrial companies as well as consumer companies is that turnaround has started. Partly, of course, aided by the Diwali season, but I think this will continue. There was a lot of pent-up demand because of 2 years of good monsoon, including this year, which was, erratic, but still overall good. And so that pent-up demand will get reflected in consumption. And that consumption story will be visible in profits and earnings growth starting from January. I guess we will have a little bit of catch-up in terms of profits, and then prices will again move depending on outcomes expected from the future. But overall, I think the outlook is good for India, though there are global signs which are, of course, worth studying, because the global matters can dramatically affect markets, not only globally, but also in India.
Good morning, Mr. Shah, and I will come to the global factors in just a bit. Our viewers don't need an introduction to Mr. Pradeep Shah, but just to reiterate, he was the founder of CRISIL, almost the founder of HDFC, if I'm not mistaken, one of the earliest project officers at ICICI. No one understands financing better than you do, Mr. Shah, and that's where the big rally has been. The NBFC companies, then the private sector banks, and now finally the public sector banks. As a private equity investor now, where do you see maximum value?
Well, I get a little worried with the run-up that we see, for instance, in the public sector banks. I think money is being given to the public sector banks without really conditions that can bring about efficiency and effectiveness. They talk about prospects and performance of the bank, on which basis money will be given. But once capital is put in, where is the control? And we have seen recapitalization in Indian Overseas Bank and Syndicate Bank and Corporation Bank time and again. Money has been infused by the government. But where was the performance? All that money sank without a trace. So the same thing can happen here. A better system would have been a guarantee for toxic loans, like the Citicorp rescue in 2008. And that would have shared the losses between the government and the bank. So there would have been
an attempt by the banks to minimize their losses. And that would also have been salutary on the defaulters, that defaulters don't escape. Here, the ability to write down bigger amounts by these public sector banks effectively gives a way out for defaulting companies. And that's not good morally. So having said that, I'm not very optimistic about the public sector banks rally continuing, not at all. I think it should correct, and in fact, there's going to be more equity coming in. But overall, the NBFCs and some of the private sector banks have done extremely well. You see HDFC, which is a continuing growth story and with excellent asset quality. So that sector is generally giving great opportunities for financiers and of course for investors to make money. In addition, we have a consumption-led economy. I mean, the growth story in consumption will continue. So we will have consumer consumables, consumer durables, and of course other sectors such as pharmaceuticals, which are really prescription-based and so on, but not exactly price elastic, but nevertheless huge potential for growth in those sectors. And you see the service sector, air traffic is growing at 16% in September and expected to continue growing at that kind of rate. We have seen, of course, travel and tourism increase and the thrust of the government on those sectors. So they will lead to growth in the economy. I think from March, April onwards, we will be talking about 7 to 8% growth for the next year.
Okay, so in that case, sir, how does one play the economy-facing side of the market? I mean, a lot of announcements were made. Bharatmala, NHAI is now talking about a higher award target for this year. So, you know, I guess investors are still trying to find out whether this is a lot of noise, how much of it is noise, and how much can be real. So, if you were to, you know, play economy-facing stocks and sectors, which would they be?
So, of course, the capital goods cycle is up, the metal cycle, and we've already seen it. You see, with the US, Europe, Japan, all doing well. And then India putting some tariff barriers, whether it's on steel or stainless steel, it is helping domestic companies at the cost of domestic consumers, of course. But nevertheless, therefore, we see profits improve in the domestic markets. So the commodity cycle is on the upswing because of global factors. And that also lends itself to opportunities here. Now, unfortunately, I think most of these opportunities have been spotted by the market and the market has run up. So as I said, there will be some catch-up as profits come up and meet expectations. But if thereafter people see that profits will continue because the economy is doing well, then we will see another step up in pricing. So till that time, I think where you see excessive price increases in stocks, one has to crop gains. This is the time to crop gains, recycle money perhaps. So you can't stay out of the market because irrational exuberance can continue for a long time. But certainly there's an opportunity to collect some money from prices which have, from shares which have run up in price and then recycle back to better value stocks.
Mr. Shah, you won't say that of some of the NBFC stocks as well? I mean, admittedly, it's a growth area. But, you know, we saw Bajaj Finance being done at 8 times. And of course, it's a marquee stock. But if others are not going at 8 times, there are many of them going at 5 times work. World of housing finance. Would you be very sanguine about NBFC stocks?
See, I don't understand why markets run up so much. Just because the sector looks good, people want to pile in, people don't want to feel left out, and so they have come into in such a big way. If the public sector banks were to become efficient and effective, they could undercut all these NBFCs in the housing finance space very effectively. And the public sector banks have much lower cost of funds than the NBFCs, which have to borrow as multiple intermediates, with multiple intermediation. So there is additional cost for their borrowings, whereas the public sector banks have savings accounts and private primary borrowings. So their cost structure is much better. So I certainly recognize this. Also, in the microfinance space, I feel there is far too much optimism. there's so much evergreening, automatic evergreening of loans going on. If a person pays back 25,000 out of 35,000, automatically the loan gets increased, and so on. And much of this is for consumption lending. The original concept of the microfinance sector was to lend for productive purposes, to buy a cow or, for instance, a sewing machine. But that is gone. It is now consumption lending. So the strata of society is getting deeply indebted, and hopefully they will not get into a debt trap, but one has to be always cautious about that, and that can lead to societal complications. We have seen in Andhra Pradesh they enacted legislation which hurt the microfinance companies and so on. So that is something which one must not ignore in the country.
So, Pradeep, is this market now ignoring this, and is there a vulnerability of a sharp correction at some point in next year?
Especially globally.
Especially globally, yeah.
Yes, I think you're absolutely right, Lata. Global is where I think the possible triggers can come from. We already see Trump in political problems there, and if Korea gives a distraction, I hope nothing happens there, but that is one possibility. Steve Mnuchin warned about the tax bill not going through as expected by the market, and if that doesn't happen, there could be a correction. If the calibration of interest rates and downsizing by the Fed does not happen in a sensitive manner, the markets can take it amiss. Then we have, Deutsche Bank economists have pointed out recent report how many triggers that could dramatically affect the global economy. For instance, China is doing well in GDP growth terms, but it is highly indebted. And if some failures get reflected in banks suddenly feeling a crunch, you can have a big setback in China. And then, of course, we have other factors, continually developing in the global markets. So currency movement, some political issues. We have a rightist trend all over the world. So if there is political cataclysm, then certainly there is a potential for a correction. I think the real trigger is U.S. interest rates and possibly this Korea thing that one has to watch very carefully.
Pradeep, it was nice talking to you. Thanks a lot for taking time out for us and giving us your views. I just want to point out one stock, Sun TV. Just see the intraday chart. I don't know, but all of a sudden there's a big bar that you're seeing on Sun TV's stock, and big upsurge right now on that. But we have our next guest joining us, Lada.
Yes, sir. Suresh Ganapathy, banking analyst at Macquarie Capital Securities, has joined us now. Good morning, Suresh. We've been wanting to speak with you for quite some time now. There's so much news happening in the private bank and the NBFC space. Well, first up, you were a firm believer in Yes Bank for a longish bit, but now confidence shaken?
Yeah, to some extent, yes, because we have already downgraded the stock to a neutral. See, the business model is built on aggressive recoveries, and I think that doesn't change. If you look at the kind of asset quality divergences that they have had in the last 3 years, they have almost recovered closer to about 85 odd percentage of those divergences, and only 15% was shown as NPLs. The problem is lack of transparency and effective communication, and that's where I think the bank scores low. Had they been a bit more transparent about some of these issues, I think things would have been relatively better. What could happen right now clearly is you can see a derating in the stock. Multiples can remain subdued for quite some time, despite them reporting similar profitability as compared to HDFC Bank or Kotak or IndusInd Bank.
Suresh, good morning. So, at what point would it be a buy again? Because if you see the anecdotal evidence, it's been a compounding story, and we have seen in the past also some disappointments play out, but somehow the stock always manages to get back.
Yeah, that's true. That's a fair enough assessment. You have seen this happening with Yes Bank multiple number of times, whether it was the QIP fiasco or whether it was the boardroom struggle. I think if you were to take a slightly longer term perspective with a 3 or 4 year perspective, I think clearly even at this price, I think it makes sense to add the stock. What we are arguing is that over the course of next 6 months, the stock may remain subdued a bit. because of a lack of investor confidence or a crisis in in overall level of confidence for the investors. So what could happen is the stock remains at current level, it underperforms, it has a time correction, but then as earnings keep getting delivered time and again, the stock will start looking cheaper and therefore will be ready for performing relatively better. So 6 months of underperformance, and post that I think really the stock should do pretty well.
Suresh, morning. Anil, let's now then come to that big recapitalization bazooka of sorts. What did you think of it, and would you advise buying any PSU banks now?
Okay, so to begin with, based on this recap news, these stocks have already rallied 25% to 50%, right? So it's already there in the price. Now, clearly, in my opinion, yes, this is a step in the right direction, no doubt about it, because at least you are giving them solvency capital and the capital required to do the necessary write-offs. Many projects were getting stuck up mainly because of the inability of the PSU banks to effect these write-offs and of course then kickstart the project. So this is obviously a step in that right direction, but the real problem is that recapitalization is not something which is new, right? It was done even in the 1990s. 20 years down the line, the system has again gone bankrupt. So recapitalization without consolidation, without structural reforms in the public sector banks, without board governance reforms is just pointless. So we have to ensure that recapitalization comes with its own sets of rules and conditions which will enhance the efficiency and overall performance of the board for all these public sector banks. Otherwise, really, it becomes very difficult to get constructive on them.
Okay. Let me come to the other big sector that's been absolutely the money spinner of the last 18 months, the NBFC space. Now things have altered a bit, haven't they, Suresh? Wholesale money is expensive. And, for what it is worth, the public sector banks have money and therefore they'll be able to slash rates. They don't have to work with 300 basis and 400 basis margins because of provisioning. So, I mean, which are the ones you still back and which of the ones would you find expensive?
Yeah, so Lata, that's where I tend to differ a bit, because I think to begin with, the public sector banks are going to do corporate lending, right? Not retail lending. As soon as you give them money, it's easy to go and then give a couple of thousand crores to a corporate and kickstart the lending. They don't have the wherewithal and the capability to sit and do an auto lending or a commercial vehicle lending. So to that extent, the domain of the NBFCs or the expertise of NBFCs doesn't go away. What could happen clearly, and where there is a challenge and where the market is not necessarily pricing in, is a reversal of the rate cycle. And that I agree with you that today what is happening is the money is actually very cheap. These NBFCs are able to borrow at very, very competitive rates and lend in the market and be attractive enough for the customers. What could happen is, if there is a reversal in the rate cycle, possibly because of the recap bonds issue or the fiscal deficit being an issue and the government bond yields rising, we're also hearing, for example, that the recap bonds could be given an SLR status. And if that happens, I'm pretty much sure that the bond market pricing will go for a toss. And therefore, the reversal in the rate cycle could cause a very sharp margin compression for these NBFCs, which the market is not pricing in. And therefore, I would be cautious or guarded on these NBFCs, specifically most of them which are trading at very high levels of valuations. So the likes of, say, Bajaj Finance or some microfinance companies, or some of the other NBFCs that are trading at very high levels of valuations, be it Mahindra Financial Services, I'll definitely be guarded on them a bit more. Okay.
Well, I just wanted to add something that I picked up from sources. SLR status is not coming. What I heard is that it will be pretty much copybook the 1993-97 issuances, where it was locked in for a bit and eventually slowly given SLR status or made into G6. Pretty much going to be copybook 93 style was what I heard. And at that time, they were not immediately given SLR status. But, well, that's just by way of additional info.
Okay, so, Suresh, I just want to ask you the simple question now. Would it be better off, I mean, in your sense, to stick with some of the names like Yes Bank, what we've already discussed, in terms of growth and incremental sort of value creation from here on, stick to retail-facing private sector lenders, or is it merit in looking at some of the corporate-facing lenders, including an ICICI Bank?
Yeah, so my positioning will differ a bit, that instead of focusing on the retail lenders, I think it's the right time to focus on the corporate facing private sector lenders.
Okay.
So to play this recap theme or the recovery theme, I think it's better to take an exposure to say the likes of ICICI and Axis at current valuations, mainly because of the fact is that in any kind of, if the eventual objective of the government is for the corporate capex recovery and the corporate cycle recovery and eventually NPLs coming down in the corporate sector, ICICI and Axis have closer to about 30% of their book and 24% of their corporate book shown as NPLs or stressed in one form or the other. So any recovery will result in their corporate book relatively being better, and therefore they will also benefit in this entire recapitalization theme. So they are better bets, to be honest, to play the recap theme. And note that the extent of dilution in them, equity dilution in them, is going to be far lower compared to the public sector banks, and that also works in their favor. On the contrary, in case of ICICI Bank, they don't even require money, right? So they easily can manage the transition of write-offs and providing for the bad loans much better compared to any of the other private sector banks. So they would remain our top picks in the sector.
Okay, thoughts on the IDFC Shriram issue, Suresh? You know, we've seen how the build-up was done, and now yesterday, of course, the deal was called off. Your thoughts on that, and how would you approach stocks like Shriram Transport or IDFC?
Yeah, so actually it's a very good thing for Shriram Transport that the deal is not going through. Right from day one, we really thought that this deal just doesn't make any sense, to be very honest, irrespective of what the management was saying. It was very negative for Shriram Transport Finance shareholders, or for that matter even Shriram City Union shareholders. So the deal getting called off is clearly removing an overhang which used to exist on the Shriram Transport Finance stock. So it's very positive for Shriram Transport Finance, and that is one of the very few NBFCs which actually has not done that well. You know, if you look at the multiples also, it's relatively much lower compared to any of the other NBFCs. So I would look at this deal falling off being very positive for Shriram Transport Finance. IDFC, irrespective of the deal, we were anyways negative on the stock going to its weak fundamentals. So the deal not going through anyways doesn't materially change our view on the stock, to be honest, over the longer term.
Okay. Yeah, well, actually, as Anuj called it right, IDFC perhaps had already distilled all the bad news, and therefore, at the moment, it's actually showing a little bit of green. But Suresh, running out of time, but I had to ask you this. You know, all the real estate guys tell us that houses are not selling, and all the housing finance companies are reporting 35–40%. Now, while a marquee name like HDFC is a different kettle of fish, are you comfortable with the other housing finance companies?
No, so if you look at it, Lata, there has been actually a reasonable demand on the affordable housing space.
Okay.
I mean, there are not many listed developers in the affordable housing space, right? So if you speak to a DLF or an Oberoi and ask them the outlook, they are definitely not going to paint a very rosy outlook, right? So if you look at the kind of growth that you are seeing, all these guys, for example, we just put out a note saying that their ticket sizes are less than 2.5 million. And the NHB data shows that less than 2.5 million ticket sizes are actually growing at 25% for the system. Okay. So a lot of incentives right from the government as well as RBI reducing risk weights and stuff is really helping the affordable housing segment, and you can see the action happening on the ground with respect to that space. So to that extent, the growth numbers more or less actually gel in line with the fundamentals of the affordable housing segment, and therefore I would not necessarily be worrying much about that segment. The real problem clearly is in the higher ticket sizes. You know, if you were to look at greater than 6–7 million or closer to 10 million, and that's where the actual slowdown is, and the new real estate regulations is also impacted quite a bit in that segment.
Fair point. That means the government's plan of affordable housing is quite clearly firing right. Suresh Ganapathy, it's always a pleasure speaking with you. We could go on and on, but we have other issues to attend to. Thank you very much